Hello, everyone. My name is Mike Jones. I'm the Director of Education for the Oracle Applications and Technologies Users Group. I am very excited to welcome everyone to today's e-learning session titled FCCS to ARCS Compliance Reconciliation at Warp Speed. Before we dive in and get started, I'd like to give everyone a brief introduction to OETUG. In case you're new to our programming, we are a community of Oracle users, and we provide education, networking, and support to our members. As being a community, we do have a great event coming up in a few weeks at the ARIA in Las Vegas. It's called Ascend. We will have some sessions from Datavale, who's presenting here today, and we do have a lot of fantastic sessions. I will place a link for that in the for that conference in the chat area. Just a quick reminder for today's webinar, you will be on mute throughout the presentation. However, you are welcome to send questions at any time in the control panel in the question box. We'll address questions at the end of the webinar. We are recording the session. The recording, as well as the slide deck, will be available to OETUG members in the knowledge base. You'll see a link for that in the chat area. Next, I'd like to introduce you to your presenter for today. His name is Kelly Green, and he's with Datavale. Take it away, Kelly.
Hello, I'm Kelly Green, Senior Consultant with Datavale. I have been in the Oracle world for quite a long time, doing EPM, and we will get to that in a second. Today's presentation is FCCS to ARCS, Reconciliation Compliance at Warp Speed, just to trip up people who try to introduce me. It's going to be about a faster way to implement ARCS if you already have FCCS. So that's me. Been in the EPM community for over 14 years. Consolidations, reporting, and account reconciliations, including ARCS and its predecessor ARM since they were in pre-release. About my company Datavale, Platinum Partner with Oracle, 18 specializations. We do the entire Oracle stack, so database, EPM, ERP, and analytics, and all of the industry specializations, I believe. So FCCS and ARCS are two separate products, two separate SKUs. You get them if you have the suite, reconciliation compliance. ARCS has two modules, reconciliation compliance and transaction matching. For today, we're mostly going to focus on the compliance reconciliation, your standard recs. You get both these, you get this in the standard suite or the enterprise suite, or you can buy them separately as standalone applications. The similarities are that they both use general ledger data. They're both focused on external financial reports, either producing them or assuring that they're accurate for both an internal and external audience, management, auditors. They both use an organizational structure. They both use the data management load process. And they're both a monthly process, part of closing the books, which is required for almost all businesses. The two applications are different because FCCS is based on periodic movement. It is a multi-dimensional application with a robust reporting engine with just general ledger data. ARCS is focused on the ending balance. You have a single profile dimension, and you have both general ledger and subledger data, because in about half the cases, you're comparing two sets of data. The ARCS implementation process. Configure the system and the attributes. So the system is full of attributes. They can be anything from the profile name to the preparer name to the balance of the account, should be a debit or credit, and as well as custom attributes, which are unlimited. Set up your security. Who are the preparers and reviewers of each rec? Who are the view and commenters at different levels? Who can load data? Who's the administrator? Build your profiles. Profiles are like your metadata. So they're like your accounts in FCCS. They do not contain data. A profile contains all the information needed to do a reconciliation, but a reconciliation is a profile attached to a period. Then you do your data integration, where you're getting your general ledger data, your subledger data, other data, and you're mapping it and loading it to a profile, and then validation of the data in the system. Tips for a speedy implementation: focus on the balance sheet. These are the ones, generally, that's what everybody does for reconciliations, is the balance sheet. In some cases, the income statement is done, but that could either be secondary, phase 2, could come later, but focus on the balance sheet first. Don't build for exceptions. Build to what the bulk of the system has, what the bulk of your recs are going to look like. If you have some one-offs, there are ways to put those in without impacting all of your other reconciliations. Some terminology I alluded to a little bit there. Segment is an individual piece of metadata like a dimension. The profiles, the metadata of the reconciliation has all the segments together. And then a reconciliation is a profile applied to a period available to hold data. Segments. This is the most important attribute. It cannot be changed without, you have to delete your application and start over if you want to change your segments. They apply to all profiles, and it determines the detail of each reconciliation. So most of the time, company account is a good starting point, if not ending point. And in this case, you see the types are text. There are different types available. Text is the easy one because it allows us to be flexible later, but you could make it a list or an integer if you want. So you select these from the FCCS dimensions. So that's your population to choose from. Start with company and account or entity and account. Don't add segments for exceptions. A single segment can have a non-standard value. So if your companies are all 4-digit integers, you can put, let's say you wanted a cost center for just one small group of accounts, you could put your 4-digit company number and then your cost center value in the company segment just for those profiles without having to add a third segment, which would be unnecessary for all of the other reconciliations. Remove prefixes. If you have E for entity or A for account or something like that, just remove them because all your segments will be shown together, so you don't have to worry about something being unique across the ARCS platform. And no leading zeros. This one's very important. I don't believe you should use leading zeros anywhere, but particularly in ARCS, even within the segment, because mass maintenance is done in Excel. And so when you export these things out to Excel, you're going to lose your leading zeros. And if you aren't careful, you will duplicate your reconciliations when you try to load them back in without the leading zeros. And at a minimum, it's just going to add steps for the administrator every time they do maintenance. So just don't do leading zeros. Do something else. Whatever you need to do else to make these not leading zero. Account type. This is one of 5 dashboard attributes. ARCS comes with a dashboard included. You get 5 attributes there in the view by dropdown right here. The account type allows a hierarchy of members based on your consolidated balance sheet report from FCCS. Build it as a hierarchy. It only displays the base level, so you can't see asset over here in the dashboard, but you can see these assets. Maybe this isn't the right level. You can sort these a couple different ways. So if you just want them in order of the report, that is available also. But if you do this here, not only is it a dashboard, but it's also a required attribute for every single profile. And so basing it on your balance sheet report means you don't have to decide what account types you want. You don't have to decide on where you're going to base that information. It's just the account detail of the segment drives your account type here. Currency. All currencies exist in the system by default. Uncheck the unused currencies. and it is all, it's like 180, 190 currencies. Anyone that is checked, you can see this enabled field over here, is in the dropdown when people are entering and reconciling items. And so removing all the ones that you don't use is very helpful, because then your users don't see 190 values in their dropdown. They just see 2, 3, 10, whatever your company uses. Use the entity attributes in FCCS to determine the needed currency. So any profile that uses a company that has a currency that's not USD or your company's main currency would need to have a different currency set for that profile. Organizational units. It's the hierarchy used to show the structure of the business. Legal entity is the most common. It controls your work days and your holidays, which you can see down here. You have multiple holiday rules, and you can choose different work days. You can also, under this access tab, you can give view only security and comment only security. So if you have a controller of North America, you could give her comment only access so she can see and comment on every single profile in the North America organizational unit without being a preparer or a reviewer for any of them. Doing the security here for view and comment only reduces some of the noise in your profiles. It also is easier to add and change because you're only making changes to this organizational unit instead of having to go through and do a find and replace or set up groups on a lot of different profiles. You can also utilize the hierarchy structure here. So if you had a CFO of Americas, that person could have access at the Americas level, which includes North and South America. Base this on the FCCS entity dimension. Start with your most used hierarchy. Replicate it here. Member name from FCCS becomes your organizational unit ID because we know those are unique. Alias in FCCS equals name here. And then if holidays do not impact due dates, you can just ignore them. So, for example, Memorial Day coming up, if you don't push your due date out an extra day because of Memorial Day, then you don't need holiday rules. The holidays simply adjust your date for you so that you don't have to change the due dates on any periods where there's a holiday during your reconciliation time. So Memorial Day, Labor Day, July 4th, New Year's, and some of those. Attributes. ARCS comes with attributes throughout. So if we just step back here for a second, everything you see on the screen is an attribute. Name, org ID, attribute, those are all attributes. Count type's an attribute. Segments are attributes. Unlimited additional attributes can be created. Text, open text, date and time, integer, number, true, false, user, yes, no. They can be used to collect data during reconciliation. So you could have people put in, they're in something that Oracle took from my original designs in the first ARM implementations, and they have a work plan, an action plan for a reconciling item. So you could say, I have an action plan. You can have a list there that says it's a journal entry, or it's an error correction, or it's rounding, or it's translation. And the preparer can fill that out during the reconciliation. Say, I'm making a journal entry. You think you have journal entry number, amount, impact, balance sheet, impact, income statement, something like that. You can use it to assign data to a profile. So you could have an attribute for country. And so when you're building the profile, you fill in this other attribute for country. Because when you're assigning data to the profile, that can't be changed, and it doesn't need to change because the country generally isn't going to change for reconciliation. If it does, it'd be normal maintenance. And then it can be used to filter any attribute can be used to filter the display of reconciliations within ARCS. So anything you can see on the screen in ARCS, you can use to filter your view of reconciliations when you're working on them. And then those filters can further be used as a starting point for your reconciliation process or as a report. So you could say, where all mine that are open, where are all the Canadian reconciliations that have been done. So any combination of any filters can be used, saved, and shared throughout the application. You would set these up for further dissecting the business, country, region, line of business, anything that is important for your business or for any profile. You know, if your bank accounts, you want to put the bank name in there, you can. If they're not in the account name already, anything that you want can be an attribute and can be applied anywhere in the system. So you could also use these could also come from FCCS if you want, if you have other custom dimensions that you're utilizing that you're not using as a segment. Process, another one of the 5 dashboard attributes, not utilized by any system function in ARCS. It is purely for division of data for dashboards or filters. Big bold letters with an exclamation point here, do not waste it. It comes set up with just the word balance sheet in it. That's not useful. You could duplicate your org unit in it if you want. You could put in some other structure. It is an attribute that is on every single profile. And so any other way that you would like to see a dashboard view of your system or filter it for people to use during the reconciliation process, utilize in the process attribute. Other config. ARC specific items that you're not going to get from anywhere else. Frequency, do you do your reconciliations monthly, quarterly, annually, etc. Risk rating, get that from your audit policy. Format, start with the defaults, add as necessary. That's where it says like a bank reconciliation does a balance comparison, or accruals is an account analysis. Those are all set up by default from Oracle, and you would just add to them if needed. Holiday rules, get from HR if necessary. Periods, set it based on your fiscal calendar and your monthly close. So you might have some of that information in FCCS if you're using Close Manager. Otherwise, the calendar on your desk would be fine as well. System settings over there on the right. Follow the setup guide. Most are self-explanatory. It's a lot of yeses and nos. Reviewer level adds 5 attributes for each level to every profile. So that means most reconciliations are going to have 1 reviewer. That's 5 attributes. You can do up to 10, which is 50 extra attributes. I'm only mentioning this because I like to set it 1 level higher than what a client says they're going to use. So if you have some high dollar reconciliations that require 3 levels of review, I would set the system to 4 to allow flexibility later, but also to not put 5 extra fields per level into the Excel file that the admin has to run. Security, most users are already going to exist for FCCS because FCCS and ARCS are going to have a lot of crossover. So you can just add the ARCS user role, and you could even export the security for all FCCS users and import it to ARCS users to make it very fast and very simple as a starting point. Admins are usually the same people, just add the ARCS admin role to them. Provision new users where you need to. A feature in ARCS that's not in FCCS is teams. This is different than groups. It's a team. So add the teams by, these are just suggestions, account groups, company, department. So if you had your AP, if you have 3 people in your AP area, you could just make AP preparer team and an AP reviewer team. They need to be separate for preparer and reviewer, and view and comment. So you could potentially have 4 teams that are similar or even have the same people. The reason you have to have different team names is that the system will not allow you to have preparers and reviewers that are the same due to segregation of duties, although you could have an AP preparer team that has 3 people and an AP reviewer team that has the same 3 people, and the system will force different people to do the actual function, but you can have the same 3 people in the team. So if you have teams that just sort of do first available, and you got a supervisor or manager that sometimes needs to do a rec, but usually just does the reviewing, put them all together in a team in any way that makes sense for you. Create a TBD preparer and a TBD reviewer team for initial setup and for ongoing maintenance. That will save the admin some headaches and will allow you to get your data, your profiles created faster and get your data in quicker during month end. Build profiles. So that was all just set up. Now we're building profiles. So the mass maintenance is done in Excel. First, create a single profile on the web, then export the file as an unformatted CSV. This is where the leading zeros get lost, causing problems when you import it back. There's no error when you dump it out. There's nothing that in Excel that shows that you deleted a bunch of data, but when you go to import it, you will duplicate any reconciliation that had a leading zero. Data in each field must be exact, which is the reason to create one, then export. So for example, just on this screen, the format has to be bank space reconciliation. The method has to be balance, match, percent, tolerance. So that's why I fill all of this out and then export it. You're also going to have areas where for organizational unit, if you remember, we had both a name and an alias, only one shows up. For users, the same thing. The user is going to show up as first name, last name, but when you export it, it's going to be their email address. So it's important to see what the system needs to receive, which is why I create one on the web and export to CSV. Each profile can easily have 50 plus attributes. Not all have to be populated. Some are actually invalid for certain profiles. Wherever it is populated, the data must be exact, as we just said. Most data is driven from a few key fields, primarily the segments. Some fields are the same for all profiles, like here on this one, active, yes, that'd be the same for everybody. Input should be the profile, and then you build cross-reference tables. So when you export it out, this is what it looks like. So this is the CSV, not open in Excel. So you'll see segment 1, segment 2, then you have all the other stuff. This is also why I use Excel, because this would be very difficult to maintain or create reconciliations in. So to start off, use SmartView to pull all the existing balances from FCCS at the level of recs. This is your base population. So take whatever your segments are going to be, company and account in this example, put those on the rows. Pick December of the previous year, year to date. Zoom in base levels on company and account. And then you can suppress zero. You can suppress missing. You cannot suppress zeros because zeros are important in the reconciliation process. So build that smart view, zoom in bottom level, both of those dimensions, suppress missing. That is your base population of reconciliations. Also, if you don't have ARCS, that's a good way to estimate how many you have when it comes time to implement and you're trying to determine how long the project will take. Then use the admin extension of SmartView to view the metadata and attributes for FCCS dimensions, especially alias and currency fields of each dimension, and then pull each dimension that you're using as a segment. So company and account here, if you're using cost center or something else, get those as well. Account type, format, method, and normal balance are all based on the account. So everyone will have account in their segments. Those 1, 2, 3, 4 attributes are driven just from account. Organizational unit and currency, oops, that's based on entity, not account. Profile name is based on the alias of all segments. Potentially, you can also come up, your profile name doesn't have to be unique, but it's what the users will see, it's what they'll click on. So having too many duplicates is not going to be helpful. So if you had accounts payable and you had it by company and you have 50 companies and you just use the account name and not a combination of company and account, it would just say accounts payable 50 times and it would be very confusing for your users. So try to come up with something a little more unique. You can just if you want to concatenate them all together as a base and then allow during the review validation process to change that, you can, but this will allow you to build all of them right now without having to wait for someone to decide on them. Build all profiles based on logic, revise with exceptions. So you can have hundreds of reconciliations, almost certainly. Most of the ones I do, 3 to 10,000 reconciliations. So you don't want to have to review 50 fields times 10,000 recs, or you'll never get done. So build all of it on logic and then come back and revise later. Here's some Excel examples. We can get into the Excel file in a little bit, but you're going to build cross-reference tables from the metadata. So this is a cross-reference table built, but here's the account member, account alias. Here I'm adding the account type to every account. You will use this based on where this account falls in your balance sheet, like we talked about way back toward the beginning. So wherever these accounts fall under my consolidated balance sheet, that's what their account type is going to be. And then the format is going to follow that account type roughly. Pretty close. And then the method just goes with the format. That's actually coming from here because this is all defined by the system, but you still have to upload it. So this one, you just do another cross-reference over here to format and method. Balance, you can go as simple as all assets are debit, all liabilities and equity are credit if you want. And then the process, we just have balance sheet here, but you could add, this is where whatever you want the process to be would go there. So every profile that has this account as one of the segments is going to get all this other information. Whoops. So we've got, this is building the name. So if there's something in the name, then we're going to use it. Otherwise, we're just going to leave a space. This is one balance where you're only using, this is auto reconciliation, so you have to pick which one you want. So only on balance comparisons are we picking this one. So if it's an account analysis, we're not doing anything there. And this is one where it's asking how you want to, if you want to manually enter the subledger, this value is only valid for balance comparison, which is why we're doing that. There's the account type, the format feeding based on the account type. So you don't need to have this account cross-reference table be as large as all of your profiles. That's not going to save you any time. So wherever you can, build smaller tables and feed those with VLOOKUPs. And so you'll do that for any dimensions that you pulled, so account and company, and then anywhere that the logic is built, you can do that. Further, you could get, if you had those teams that we said, maybe your AP accounts, then get AP teams, so that would be another cross-reference field. So anywhere the business logic dictates how the attributes are filled in, try to build that logic into Excel to populate based on rules and not on someone having to review it. Invalid mappings. So invalid mappings are the most common error for data loading in ARCS. It means that a new combination of your segments came through with a balance that doesn't exist in ARCS. So one of the difficult pieces of ARCS is that the intersection of all of the segments is unique, and so you're not getting metadata requests for that, even in FCCS, because the account already existed, the company already existed, it's just being used together for the first time. As you increase your segments, so you can see in my example here, there are 5 segments. As you increase the segments, you're going to increase your invalid mappings occurrences, and you're going to get more. Generally, I would have the admin load data sometime before the account rec process starts to catch as many invalid mappings as they can, and then just know that you could get it anytime you potentially data load. The system does load all of the valid data, it just doesn't load the invalid data. So when you get this when a new profile would be needed to hold data that mapped in data management. This exports as a single column CSV file with new profile as the data. So you can see here, this is the error screen. You hit the Excel button, you get this. So use that Excel file to build your profiles and then also ongoing to create new profiles whenever you get this. You do not want the invalid mappings here in the results on your data load. Proper data file and mapping will handle it all. And so you should get success without invalid mappings so that you know that if something isn't invalid mappings, you need to address it and move on. So let's real quickly step out here. So here is the Excel file to build it. So what I'm saying is paste the invalid mappings here as your input, and then your output will take all of those and split them all up. So no matter how many invalid mappings you have, from 1 to 10,000, it's going to be faster and more accurate for you to paste those here, save this as a template, paste those here, do another save as, quick review here, and then save this as a CSV to import back into ARCS. Data integration. First, you start with the import format. Use the same data file as FCCS, but with year-to-date values for ledger data. So if you're already loading year-to-date values into FCCS, you can use the same file. If your file has periodic and year-to-date data in it, you can use that same file, just pick the proper amount column. If you need a new file from your ledger team, have them make it as close to the FCCS file as possible, just with the year-to-date balances. Then you make the import format the same. Whoops. But everybody is using the profile field, so you only have one field to import to. We don't have company account, intercompany, cost center. So put them all in there. You'll see that I had 2 of each here. So I'm including fields for delimiters because I want this to come in as company dash account dash intercompany, so that if it is all successful, it can just export to ARCS. So ARCS requires the dashes to be in there, so you've got to put them in there somewhere. You need to include a currency field and a source type field. So source type, this is sort of a shorter one here, but you got to have a currency. You can force the currency value in if you know it. Otherwise, if it's available in the system, just import it. You do have to specify it. You can't leave it blank throughout the process. And then source type, you need a field, put something in it, an expression, and then you need to map to it later. But this will make it easier to identify on screen if you fill in something here instead of leaving it blank or whatever was in field 3. And then if you're not going to be using something, type in here. So in this one, I'm not using this field, so I just filled in with 6 nines with a dash on each side. Locations. Create the locations like FCCS. Similar names make it easier to administer. Your administrator will know that this location had a problem in FCCS. I better go check and make sure it won't have a problem in ARCS. Your users will also get used to saying, hey, that location failed, and they'll know it's the same data. Matching locations and folders is going to be easier for automation. So if you got an EPM automate loading your FCCS, you could take large portions of that EPM automate code and use it for ARCS if your inbox folders look the same in data management. ARCS data loads are based on location, not load rule, so that will be different. Create the data loads in ARCS, one per location, again, because it's not based on load rules, so multiple load rules is not, they will all fire, which is probably not what you want. And then you can group the loads from within ARCS where you select multiple locations at once if the data allows. Mapping. The mapping does not transfer because of dimensionality. FCCS is going to have company account, intercompany, your 13 dimensions or so. If the dimension values are the same in the ledger and ARCS, minimal mapping is required. So if your accounts and your entity values look just how you want them to look in ARCS, except you need dashes in between them, piece of cake. If the dimension values are different, then complex mapping may be required. Export all your dimension maps from FCCS, then create a new profile mapping in Excel, do a worksheet by dimension, and then combine all the dimensions in profile. So you're essentially concatenating all of the mapping together. If the source mapping is all based on one or two fields, it'll be easier. If the source map, if you have 5 segments and each segment has its own unique mapping, your mapping for ARCS is going to get very complicated very quickly. Data validation. Use SmartView to pull FCCS data with the segment dimensions on the row. So going back to our example, company and account, year-to-date view, zoom to the bottom, suppress missing, not zero. So the same thing we did to get the base population you do for validation for whatever period you're validating. Whatever period you built, loaded into ARCS, do that pull again, remembering to start at the top and zoom to the bottom for all dimensions that are on the rows. That's one set of data. And then for ARCS, export your reconciliations with the source balance field, sort them to line them up with FCCS, calculate the variance, and address the issues. One of the challenges with ARCS, if a client doesn't have FCCS, is how do you validate that data? Usually in a lot of Excel. So using FCCS simplifies the source side of that process. Automation. EPM automate to load data as received. So watch a folder, load whatever comes in there. ARCS is a different load process than FCCS. Excuse me. ARCS requires you to pull the data through. So if you're doing it manually, you'd actually go into ARCS, into a period, so April 2022, and import data. And then when you click import data from ARCS, it actually goes back to data management and runs the load rule. So you don't get to pick your file, you don't get it, you do it from there. So the automation has to call it from there, which is just a little bit different. Another reason to use ARCS. There are presentations I've given before on why EPM Automate makes more sense for ARCS even than FCCS because it's something like 12 screens, more steps on more screens, something like 12 screens you have to go to load data start to finish in ARCS. You can mirror the file drop structure of FCCS loads, we just talked about where you can mirror the inbox locations and paths in ARCS. That'll take care of the process of receiving the file, renaming the file, uploading the file, and being ready to load. So all that would be exactly the same between the two codes. You can also use this to load your ledger, or you can use it to load your ledger and subledger and third-party data. Any data that you're going to load, you can use EPM Automate for. Use a separate installed EPM Automate for each of the data sources to eliminate crossover logins. So if you've ever run EPM Automate loading multiple files on a schedule, you've had this happen before. It's annoying, so just copy your EPM Automate folder over for each one. All right, so to summarize, we're pulling our segments from FCCS dimensions. We're using the balance sheet line items to get our account type, FCCS entity hierarchy to get the organizational units, FCCS currencies for our currency, data source replicating the FCCS load and adjusting it for ARC setup, validation against FCCS for balances and GL mapping. So that wraps us up on ARCS based on FCCS. Are there any questions? So
okay, if you
I
have
believe,
any questions,
yeah.
please type it into the question box of the control panel. I know Kelly just shared a lot of information, so if you have any questions, please type them in there right now. Kelly, did you have a slide with your email on there? Maybe if someone thinks of it later.
I don't. Info@datavail.com will get to me, or someone more relevant if the question isn't exactly for me.
Someone's asking a question. Can you do a demo? Can you do a quick? Can you do a demo of the quick interface?
Like data management interface? I don't. Oracle has pulled most of the demo stuff. Data management is
ARCS is what
this.
they said.
I don't think so. See if I remember any of my passwords. And then I'm supposed to plug this. We will also be at the Ascend conference as a Diamond partner. We'll be at booth 301 in Las Vegas, and we have 2 client presentations with the Atlanta Hawks and Adtran, both for EPM. So that will be exciting and fun for everybody.
That's
Okay.
the simple way to get the demo, right? To actually attend Ascend.
Yes.
I know the hotel rooms are selling out. So if you did want to attend in person, you can do that. We also have a virtual option. So if you can't travel, there is a virtual option for attending Ascend. And I put that information in the chat area.
Okay. Can you ask the question asker if they want to see ARCS or
It was ARCS.
Okay.
It was ARCS.
So this is ARCS. For those of you who don't know, there are some other presentations. Oracle also has a whole YouTube channel for EPM that is good for quick overviews. This is ARCS. Reconciliations would be for the users. This is where they would see the reconciliation and the balances. So here you would see all the reconciliations with data loaded. If they, well, this one's closed, but then they click on the name. So that's why I was saying the name is real important, because they're not actually clicking on the account ID. So the name should be fairly unique. The summary tab shows you your ledger data. Balance explanations are what you put in here. This is an account analysis one. Balance explanations are reconciling items. They have this other stuff here. All of these, like I mentioned, all of these are attributes. So the description, the date, close date, long description are all attributes. And then let's see. I don't want accruals. So none of these are balance comparisons. Nope. All so that is how the user sees it. The profiles that we went through, how the admin would see it, is here. There's that screen I showed. So the auto rec, you have a few different options for auto reconciliation. Those are both based on your method, or those are all based on your method. Instructions can be anything. Workflow is where you're going to put in the timing, how long they get to prepare it, how long they get to review it. schedule date, frequency, prepare, and reviewer.
And a question just came in also, does ARCS help with intercompany reconciliation? Any best practice recommendation for intercompany reconciliation?
So yes, it helps a great deal with intercompany reconciliation. You can approach it a number of different ways depending on how clean your data is and how separate your reconciliations are. If you have unique balances that should exactly match, so you have like a company account, intercompany partner pairing in FCCS that exactly matches, you could put those two together and add a parent called a summary reconciliation, and that summary should come to 0. You could also map those two balances together into a single profile when we use the open text for our segments. So the 101 and the 11101 here, you could make it be anything. So you could have it be like IC dash company A with company B, and you map their two accounts together, or 4 accounts or 12 accounts or how many accounts you want, but it's that unique pairing, and you map all of them together in data management to load one single rec. It should just be 0. So you could do it that way. You could do, if it's sort of a mess, you could dump all of your intercompany balances together and put one big summary on them and not worry about all of the detail underneath as long as the summary is 0. Obviously, with more intercompany and more accounts and more profiles, that's going to get more and more difficult.
All right. Well, I think we're all finished here. If anyone has any questions, Kelly shared his information, so if you need to get in touch with them.
Okay, well, I hope good luck, everyone, and have a great conference.
All right, thanks.
Thank you.
This will conclude the webinar.